Hi everyone. So we would like to talk about the contract cost and the accounting thereof under the guidance for the revenue from contract with customers. Now friends, we divide these costs into two categories. One is incremental cost and second is cost to fulfill a contract. Okay. When I look at an incremental cost, think of something like that you are bidding for a contract. Okay. And you would incur, for example, legal or compliance costs. Okay, you might be kind of looking for costs which are associated with the bidding fee. Okay, you might be paying some sales commissions, for example, and stuff like that, right? So these are the incremental costs that we are talking about. Now essentially the guidance suggests that for the incremental cost to be capitalized, right? For the incremental cost to be capitalized, it is necessary that these relate directly to the winning of the contract, right? That's a simplistic way of looking at it. The other way of understanding is that these are the costs which are going to be incurred only if you win the contract. Okay, right? If these were the costs which would be incurred despite what is the result of or the outcome of the bidding, then these are not the incremental costs. Okay, so if I say that, I want to bring along that any legal or compliance costs you would necessarily incur it even if you don't win the contract. Any bidding fee, you would necessarily incur it even if you don't win the contract. However, you would only pay the sales commission if you have won the contract. Okay, and that is where these incremental costs are identified as. The costs are incremental provided they are only arising, they are only increasing or being incurred if you have won the contract. Okay, and that is where these costs are capitalized. Okay, that is where these costs are capitalized. Everything else is of course charged to the income statement or the profit or loss account, right? The most common example you can always think of is the sales commission, right? You would only pay if you are incurring, if you are winning that particular contract. Okay, now one easy part that the standard also suggests that in case the term is less than 1 year, companies are allowed, there is a practical expedient wherein these costs are also charged to the P&L. All right, so you don't have to again worry about it. Primarily, incremental costs would sit in the P&L account straightforward most of the times, right? Unless, for example, if I were to bring a scenario that I'm a IT company like TCS or Infosys or whatever name you want to kind of mention. Okay, I'm a company of that cadre and I'm bidding for a particular outsourcing arrangement with a client of mine, or software services is a provisioning I'm doing, and the contract is going to be for 5 years. Okay, now any bidding cost, any legal cost, any compliance cost, any documentation cost, any tendering cost, they're all charged to P&L straight away. But the moment I say there is my pre-sales team who are awarded a bonus or an incentive if the contract was won. Okay, that is the cost, because the term is 5 years. That is a cost which is going to be capitalized, and the treatment has to be done as an amortization of that cost over the 5 years term, right? If you put it like this, let's say that's, just an extension of the example. If let's say the term is 3 years, okay, so there is an incentive which is planned for the original tendering. There is an incentive to be paid to the employees for the tendering of the contract if the company wins that contract. And then there is also a possibility that the company suggests, for example, that after 3 years of time, if this contract is renewed for another 2 years, then again the sales people would be incentivized further. Okay, now in that case you have to wait for that renewal to happen. You have to wait for that renewal to happen, and any commission payable at that point in time would also be capitalized in the same way as an incremental cost. All right, so that is something which is the simpler part. Easy part is Normally, incremental costs are charged to the P&L unless the term is more than 1 year with respect to common example of sales commissions there. Okay. The other part, the other equation comes to cost to fulfill a contract, right? Now, what are the costs to fulfill a contract, right? We say, again, let's say I'm a ID company. Let's say I'm Accenture, for example. Okay. Now, Accenture approaches a client where it would, let's say, be installing an ERP, training its employees, for example, to undertake the deployment of that ERP. Okay, so this is one cost. This is second cost. It would be incurring travel costs of the employees. Okay, for the deployment. Okay, it would also be, for example, incurring cost of bringing some servers or a hardware. Of course, in today's world, we don't really see that coming in. Okay, so it could be a cloud support, right? So when you look at all these kind of costs, right, we need to understand that whether these costs are being incurred to fulfill a contract. Okay, contract is one. It's all about now the next step, the next stage, where you look at the installation of an ERP, training its employees, travel cost, and then of course you have servers, hardware, cloud, etc. The first thing that you want to pick up here is that, is any of this cost, or are any of these costs come from a different standard, right? Do they fall within the scope of another standard is something that we want to talk about. Okay, so very, very comfortably we can say this section, the servers and the hardware or the cloud, would either be falling within the purview of property, plant and equipment, or intangible assets. Okay, so the moment you see any other standard taking up, then revenue would not apply. Okay, so the guidance of that respective standard would come in place. More common examples could be inventories accounting standard, or of course, as we said, property, plant and equipment, or lease accounting standard, or for that matter, intangible assets accounting standard. Okay, so we don't have to worry about that part. So this is not within the scope of the revenue standard there. The other part that you want to understand is that, are they eligible for capitalization? Okay, are they able to kind of meet that parameter of capitalization? And if you look at the training of the employees, right, the very aspect of the control is not met. So if Accenture is training its employees so that those employees can be billed to the client, okay, the training cost is not a capitalized cost at all. It is always charged to the P&L straight away, right? So since the control is not there, this has to go to the P&L part of it. Okay, now we look at the installation of an ERP and the travel cost. Let's add another cost, for example, where we say that there is a data migration, right? A UAT, that is normally a user acceptance test, right? Which is very, very commonly conducted for any new system coming in place, right? So you look at again these types of costs. So installation of an ERP, we again need to assess whether this would probably meet the criteria of, again, an intangible asset. Okay, we need to assess that part here, and then you look at, of course, the travel costs here, and then of course the data migration cost. That these are directly pertaining or relating to the contract, enhance the resources of the client, and are recoverable. Very likely the cost of travel, okay, or even specifically the data migration costs, right? These would be capitalized here. Okay, so this would probably be coming as a directly at allocable cost, right, to that particular contract per se, and that is where the capitalization would take place. Okay, so effectively, if I were to again summarize what we have talked about briefly here is that there are two categories of cost. One is incremental cost, the cost that would be capitalized only if you win the contract, right? I mean, they would be incurred only if you win the contract, and accordingly they may be capitalized, specifically only be required if the contract term is more than 1 year. Okay, and then the cost to fulfill the contract. Three parameters. One is that these directly relate to the contract. They enhance or generate resources for the client or the contract. And third, of course, these are recoverable as well. And accordingly, these shall be capitalized as a requirement of this particular standard. Okay.